Good morning. This is Rick with Hit and Run Candlesticks. It's Friday morning, April 1st, 2011. Okay, here we are with a SPY chart. In yesterday's video, I pointed out that the SPY needed to close above yesterday's, what we call our base low, off the body of the candlestick. So it needed to close right above, and it did by about 4 pennies. That's cutting it close. The candlestick signals here are showing a little bit of toppiness, but what we need, a little bit of toppiness, but any kind of a positive move will negate that. SPY want to move up, might want to move up and grab up into these areas right here. Although if we do see some weakness today and it starts falling below these our base lows, which is the low of the bodies of the candle, if it starts getting too far down there, and then certainly if it closes, we're more than likely headed down to have a meeting of what we call the T line. That's the black line. Any failure there could send us down to one of these levels. Uh, Certainly not, well, I certainly wouldn't think all at one time. It's like climbing down from a tree. So what we need to see today is some definite positive trading above those base lows, and that would kick us back up into this area, and maybe we test these highs. Uh, you know, let's see here. Let's take a look at the Qs real quick. Looking at the Qs, they're in a nice short-term, what we call a short-term swing uptrend, just as a SPY was too. Trending up nice little bullish engulf yesterday. Qs certainly are looking like they're going to move higher. What we don't want to see is a negative candle, something that says, okay, we've topped out, because there's no doubt that it's been up a bit. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. And if we throw a couple of gaps in there, that might be stretching it out. But until we see those sell signals or those topping signals, we have to assume that the trend is still going to run. And you can see price is leading our 2 EMA, and our 2 EMA is leading our T line, signifying a nice short-term trend. How about the diamonds? Diamonds are kind of another story now. Certainly have been up. We have our swing low buy signal here with the 2 crossing the T line. Price is definitely leading to the upside. I don't really like these 2 candles here, the close of the past 2 days. Gap up, a pair of shooting stars up there, right at a double top. That I'm not too crazy about. Price, without question, needs to get over those tops right there. And let's see if we can pop a little line in there. Again, we definitely need to be trading above the base low of these candles. There's 2 bodies right here, so trading above that today will keep us in an okay. So we will stay in positions. We'll trade accordingly. But if we start peaking below a little too far, I personally will start sell. Well, it's Friday anyway. I'm likely to sell off a few profits that I have on the longs, and might even start looking at a few of the inverse. Quick look at the IWM. IWM, which is our leader. IWM has broken out of this double top. Looks to me like it's headed to the 2007 85-ish area. Swing low buy signal came right up through the T line, running right up that T line area. It is getting a little far away. It might need that little bit of a pullback, which would not be a problem at all. The main thing is we just keep that trend going. If the trend starts to fail a little bit, the likely target to the downside will price will want to come down and touch this black line. This is what we call our T line, our 8 exponential moving average. Used as a tool, the way we use it, it's extremely good, extremely good. One more I wanted to look at, XLF. Whoops, did that wrong. XLF. I'm a little concerned why the financials aren't taking off. This is showing me a bit of concern.